The Q4 outlook hinges on robust holiday electronics sales, yet tariff risks, weak consumer spending, and rising e-commerce competition weigh on profitability. Analysts downgrades rating to sell amid these headwinds. The retailer beat Q4 estimates with 0.5% comparable sales growth and a GAAP diluted EPS of $0.54 after a goodwill hit. It raised its quarterly dividend to $0.95 while warning that tariff-driven price pressures could temper future outlook, causing the stock to dip despite strong earnings. Omnichannel focus pays off as the retailer reports stronger than expected quarterly sales, driven by new personalization tools, expanded store presence, and boosted staff investment. The strategy signals a return to solid revenue growth. The Canadian electronics retailer announced a partnership with Ping Pong to become its first cross-border payment provider, aiming to boost international marketplace sales through embedded payment solutions and drive global growth. Craver's latest CNBC call called recent earnings a shock, while tariff worries loom as a near-term risk to profits. Meanwhile, the Canadian ARM names longtime exec Matt Pobbs its new president after 11 years with the company. Reports a full-year 2025 miss on EPS, with revenue falling 4.4% to $41.5 billion, while China's consumer shift fuels growth in pre-owned and refurbished goods. PDD misses Q4 estimates, but Xiaomi posts record revenues and profits. Faces a sharp sell-off after CD downgrades to neutral over rising U.S. tariff and slowing consumer spending, while BBY also double downgrades the retailer. Analysts warn the new Trump tariff regime could hit sales hard. Morgan Stanley upgraded the firm to overweight, raising its price target to $67 from $65, citing a compelling valuation at current share levels despite modest expectations for accelerated growth. Shares climb as the administration removes consumer electronics from the 145% tariff list, lifting pressure on semiconductor and hardware stocks and boosting market sentiment. The 2025 annual report highlights resilient employee focus amid market volatility and disciplined operations, underscoring a continued commitment to customer service as key to sustaining performance. Newegg stock briefly rallied after a reverse split, but Q4 sales fell short and the FY25 outlook remains unclear. Meanwhile, Segway partners with a Canadian retailer to launch its new 9-bot F3 Pro e-kick scooter at $699.99 CAD $1,199.99 MSRP across 90-plus stores. Shares slid to $72 over 6 months, wiping out 17% of shareholder value, while the S&P 500 stayed flat, raising questions about whether investors should buy, sell, or hold amid a disappointing Q4 earnings outlook. Analysts expect the retailer's Q1 earnings to hit estimates, but with a trimmed outlook as tariff pressures bite. Investors are urged to look beyond headline numbers and focus on key operational metrics that could reveal hidden strength or weakness. The retailer expands its electronics lineup by partnering with Ugreen, adding high-performance mobile accessories, chargers, power banks, and wireless charging to both online and in-store shelves, boosting its premium product offering. The retailer is set to report earnings before a market open, with analysts eyeing a possible sales lift from tariff concerns and a switch to pre-sale. Meanwhile, Norbert Bell-Locker filed an exempt solicitation urging shareholders to support his proposed agenda. The company announced it will end its shop-in-shop partnership with its retail partner, cutting 8% of staff and incurring $1.7–2.1 million in costs to finish by Q3 FY 2026. First quarter revenue stayed flat at $8.77 billion, but EPS fell short of expectations, and the new guidance for Q2 was not provided. A recent piece highlighted the retailer's quiet expansion into U.S. retail, noting its strategic acquisition of multiple American storefronts to broaden its footprint. Segway launches its new E3 electric scooter at $499.99 CAD through an exclusive partnership with a Canadian retailer, opening pre-orders now and shipping from July 18. The brand tops global e-kick scooter sales with over 13 million units sold worldwide. The retailer has sold its home care unit Current Health, which was bought back by co-founder Christopher McGee after nearly 4 years under its ownership. The move marks a clean exit from the health tech side of its portfolio. Sharp cost cuts and an efficiency drive helped the firm post a first quarter profit even as hardware and software sales fell sharply. Collectibles sales jumped 55% in Q1, helping offset gaming decline and driving a new lifestyle retail strategy for the retailer. The shift signals a pivot toward broader consumer goods beyond its core gaming business. Pervisible's takeover of internet marketing ninjas blends traditional and AI SEO expertise, while the retailer rides a PC refresh cycle and an upcoming Switch 2 launch to boost revenue and maintain a 5.2% dividend yield, making it a compelling buy amid Nintendo's return to Amazon. Senior executive Damian Harmon will step down as Senior EVP for Channel and Customer Experiences and Enterprise Services, with his departure taking effect on July 18. Shares slid about 3% after Piper Sandler moved the retailer from overweight to neutral and trimmed its target to $75 from $82, citing weak appliance sales and a lack of near-term growth catalysts. GameStop's first quarter revenue fell 16.9% as declining hardware and software sales underscore a shrinking physical retail presence, raising questions about the company's ability to reverse its downward trend. Q1 earnings highlighted mixed results amid a cooling consumer tech market. Sales fell short of expectations, yet stronger performance in online and services segments was noted, signaling a shift toward digital growth despite declining brick-and-mortar sales. GameStop's U.S. profits bounced in Q1, but a sharp decline in Europe and the loss of its Canadian market keep the recovery fragile, underscoring that the stock's turnaround still hinges on domestic strength amid ongoing global headwinds. Analysts anticipate the upcoming Q2 earnings to show a modest decline, with net income expected to fall by a single-digit percentage when the results are reported in September. Meanwhile, a major electronics retailer launches pilot IKEA shop-in-shops and new kitchen and storage planning services in select U.S. stores. Retailer faces a tough road ahead as analysts call for a new chief executive and fresh capital injections to revitalize operations and drive growth. Shares rose 4.7% after the retailer announced it has surpassed 1,000 customers on its network-as-a-service platform, a key milestone for its late 2023 launch. Meanwhile, Q2 sales momentum is expected to remain steady, offering no major catalyst. A new digital marketplace launches today, more than doubling online inventory and adding fresh brands and categories, driving a share price lift. Tariffs add cost pressure for U.S. retailers, while the firm remains on dividend growth radar. Subway appoints Damian Harmon as North American president, signaling a leadership shift aimed at boosting growth and operational efficiency across the U.S. and Canada. Holiday demand for the Nintendo Switch 2 is set to lift near-term sales, while analysts expect a second quarter earnings beat despite ongoing headwinds. JP Morgan has trimmed its price target to $88 from $95, keeping an overweight stance. The retailer's Q3 earnings are set to be announced tomorrow amid mixed market chatter. Analysts expect softer sales as consumers curb spending, yet the retailer's strong beat history keeps upside in play. Meanwhile, Ring-Con's new Gen 2 smart ring is now live on its website. Revenue rose 1.6% to $9.44 billion, and adjusted earnings hit $1.28 a share, beating the $1.21 estimate. The firm kept its full-year guidance near $41.5 billion while flagging tariff risks. Shares slipped about 4.5% after the report. Uber expands its retail footprint by partnering with a major electronics retailer to offer same-day delivery of electronics and appliances through the Uber Eats app, tapping a network of over 800 stores for instant doorstep service. FedEx secured a key partnership as the primary parcel carrier for a major electronics retailer, with the retailer's CEO highlighting Sunday delivery and real-time tracking data that will boost customer satisfaction. Uber's global footprint, solid earnings, and aggressive share buybacks give it an edge over Grab, whose Southeast Asian focus limits upside potential. The market favors Uber for broader growth prospects. The latest earnings fell short of expectations, yet shareholders remain largely unconcerned. The company added former Walmart executive Megan Frank to its board, signaling a focus on retail and finance expertise. Dividend activity was noted but unchanged. Argus keeps a hold on the firm but signals it could upgrade if its e-commerce investments pay off, noting strong management adaptability and rising demand for AI-enabled computers, tablets, phones, and wearables that should lift sales. The retailer is boosting its advertising arm by hosting an inaugural ads showcase and partnering with Meta to launch a $799 Ray-Ban display smart glasses demo that streams text, video calls, and AI answers in real time, while Uber teams up with Flytrex for drone deliveries to cut costs. FedEx has become the retailer's main national parcel carrier, a move aimed at cutting customer support calls, order cancellations, and reshipment costs through real-time tracking and streamlined communication. Visible expands to the retailer's online store and will open nationwide in-store locations, keeping its app-first experience while adding physical touchpoints. Meanwhile, Uber Eats partners with the retailer to ship electronics and appliances from 800-plus stores. Chairman Emeritus Richard Schultz sold 196,100 shares at roughly $74 each, a $14.5 million move, while analysts still rank the firm as a top retirement and dividend play thanks to its strong physical and online presence in consumer electronics. Closed Q2 with solid results, matching expectations and outperforming many specialty retail peers. Revenue and margin figures held steady, while a strategic focus on tech upgrades and customer experience kept investors optimistic. Insider Corey Berry sold options worth about $1.33 million, indicating a significant liquidity move and potential shift in her position for the retailer. Dividend News highlights the week's changes in champions, contenders, and challengers, detailing upcoming ex-dividend dates, pay dates, and any adjustments to payouts for investors. Jefferies keeps its buy call on the retailer and lifts its target price to $95, up from $88, signaling confidence in the retailer's upside potential. Rapid on-demand delivery growth positions the retailer as a new Amazon, with strong free cash flow and key partnerships fueling optimism, while softer U.S.-China trade policy eases tariff worries for electronics retailers, boosting supply chain confidence. Anticipated Q3 results show strong revenue and earnings momentum driven by loyalty initiatives, robust demand, and expanding omnichannel capabilities. Award-winning Vitra XR glasses debut in 200 stores nationwide, giving U.S. shoppers their first chance to try full-display XR eyewear in person at a major electronics retailer. Woojers secures a 3PL partner to handle Kuzi, Update, and nationwide shipping to major retailers such as Costco and Sam's Club, while Ship2Box.com expands its AI-powered commerce network ahead of holiday 2025. Q3 earnings are projected to rise modestly in single digits. Yubico's flagship UBI security keys are now available in 350 U.S. stores, marking the company's first wide retail rollout and reinforcing its goal of making the internet safer for everyone. IKEA U.S. partners with a major electronics retailer to launch in-store kitchen and laundry playing centers at select outlets in Texas and Florida, offering immersive, inspirational setups that help shoppers design cohesive living spaces. Analyst Scott Ziegele at Truist Securities maintains a hold rating and raises the price target for the retailer from $72 to $79, signaling confidence in its near-term performance while keeping expectations steady. New AI-powered tools enhance holiday shopping with personalized, convenient experiences, while Barron's 2025 Sustainable Dividend List spotlights high-yield, growth-oriented ESG leaders. Retail analysts warn that Q3 earnings will likely be weak as consumers tighten spending before the holiday rush, suggesting cautious expectations for large retailers in the coming quarter. The retailer is poised for an earnings upswing in its next report, with analysts citing strong revenue drivers and cost controls that suggest a likely beat. Investors should note the consensus forecast of higher margins and solid sales momentum ahead. Sales rose to $9.672 billion, beating the $9.590 billion estimate, while adjusted EPS hit $1.40 versus a $1.31 forecast, an 11% jump from last year's $1.26. Comparable store sales climbed 2.7%, and the firm lifted its FY26 outlook to $41.65, $41.95 in revenue, and $6.25, $6.35. Q3 beats estimates with 1.6% revenue growth and stronger online sales, while margins face mixed pressure. Analysts across the board lift targets Barclays to $81, Guggenheim $90, Truist $84, Evercore $85, UBS $96, and note a 7% week high after a 7.6% YTD decline. The retailer expands its board by adding Dylan Jaja, the chief executive officer of Riot Games, effective immediately. The move brings gaming industry leadership into the governance structure. Q3 beat Wall Street, with revenue and non-GAAP EPS topping forecasts thanks to strong computing, gaming, and mobile sales, a successful back-to-school push, and improved omnichannel execution. CEO Corey Berry highlighted resilient yet deal-focused customers while noting, Evercore's analyst Greg Melly keeps in line but trims the target price to $80, down from $85. signaling a modestly cautious outlook for the retailer. Dividend outlook shifts as the firm moves into a new spot on the JP Morgan December analyst focus list, drawing 5 high-yield picks for growth and income investors. Upcoming ex-dividend and pay dates are highlighted in the latest Dividend Champion update. Rating upgraded as fundamentals strengthen and a solid 5% plus dividend makes it an attractive buy. Falling interest rates could further boost the business. OpenAI-powered conversational commerce is poised to become a new growth engine for the retailer, promising to transform how shoppers discover products, place orders, and receive them through digital channels. Holiday season focused on tight promotion discipline to protect margins while ramping up higher margin services and memberships, drawing investors' eye to the resilient earnings mix and continued growth strategy. Barclays keeps its equal weight stance but trims the price target to $77, down from $81. Q3 revenue rose 2.7% as ads and marketplace sales boost margins, while comparable growth accelerates. It remains a buy with an attractive valuation amid improving profitability. Value concerns grow as revenue declines, debt rises, and demand weakens, leaving little upside for the firm's stock. Investors see a potential value trap amid shrinking earnings and mounting financial pressure. Analysts reviewed the retailer's outlook, with 14 experts weighing in. Morgan Stanley kept an equal weight stance but trimmed its price target from $82 to $76, signaling a more cautious view on near-term upside. Truist lowered its price target to $73 from $77 while keeping a hold, citing a review of spending data. Analysts expect upcoming Q4 earnings to show a single-digit decline in net income. WeShop expands its community-owned platform by partnering with a major electronics retailer, Samsung, Lenovo, and eBay to boost electronics sales as TV, sound system, and connected device demand spikes ahead of the big game. Target focuses on Roundel and Target Plus to drive high-margin growth, using retail media and marketplace tech to offset sales pressure and unlock new profit streams. JP Morgan pulls back to neutral, slashing its target from $99 to $76 amid concerns of tighter comps, weaker earnings outlook, and guidance risk, while other analysts echo the downgrade, noting short-term upside but mounting headwinds. The retailer remains at a solid income play, paying a $0.95 quarterly dividend that translates to a 5.6% yield on its $14 billion plus market cap, even as it battles Amazon in consumer electronics and appliances. E-commerce shares rally as the Supreme Court rejects Trump's tariff plan, easing pressure on retailers that had raised prices and restructured supply chains to cope with higher duties. This relief lifts costs and boosts investor sentiment.